If you watch business channels regularly, you must have seen that there is a session called Expert Advice where people can call experts and ask their questions related to stocks. And most of the questions you see people asking, I bought this stock at 500, now it is trading at 250, should I sell it or hold it? Or I bought this stock at 200, now it is trading at 100, should I sell it or hold it? This happens because most of the people, they buy stocks on recommendation from the friends or family or tips from WhatsApp or Telegram group, and they get stuck by holding the losing stocks for years and years, and they don't know what to do. But now with the introduction of AI, you don't have to buy any random stocks based on recommendation, because AI can do full research on the stock and can give you the report within minutes telling you whether that stock is good fundamentally or no, whether it's a genuine company or it's a pump and dump company, is there any red flags in that company, then you can decide whether you have to go for the stocks or no. But most important is when you are using AI, giving the right prompt is very important. If you give the casual prompt like tell me whether this company is good or bad, then AI also will give you the casual answer. So that is why you have to have the right prompt so that AI can do full research on that company and can give you the report. And that is exactly what this video is about. In this video, I'm going to discuss how I'm building 100 stocks portfolio, especially with small cap, with the help of AI, plus my technical expertise, plus risk management and position sizing. So before I show you the prompt what you have to use, let me take you through my portfolio and I'll show you what process I follow for building my portfolio. Okay, now let me show you my personal portfolio of small cap stocks to show you what process I follow and what risk management, position sizing, everything. So here you can see that first holding is showing 67. That means I was telling you that I am building a portfolio of 100 stocks. Out of that, already 67 stocks are already I have purchased it, and still 33 stocks I have yet to purchase, which I am currently shortlisting. And you can see that currently total investment is showing 67 lakhs and current value showing around 73 lakhs. And this one is days P&L, but the most important is the total P&L, which is showing around 5,85,000. And next one, what you can see is that all the stocks I have hidden it. I have not revealed the stock names, and the reason is this is not a recommendation video. Okay, that is why I have hidden all the stock name, because this is not a video to recommend you any stocks. This is the video to show you what process I follow in building my portfolio and how strict risk management and position sizing I follow. So you can see that out of this 67 stocks, most of the stocks are in green, right? You can see that most of the stocks are green. Here and there only small red are there, but most of them are green. And if I click on net chain to say maximum to lowest, and I started building this small cap portfolio around 2-3 months back. And another thing what you can see that most of the stocks which are in green, profits are bigger, 48%, 33%, 29, 28%, 26% and all this. But when you come at the stocks which are in red, that means which are in loss, losses are smaller. You can see that this is less than 1%, less than 1%, less than 1%. Here it is around 3% and here it is around 5%. Why is that there is no big losses? Why losses are smaller and profits are bigger? Is it that once I purchased the stock, immediately started going up? That means it was so good that every stock started giving profit after buying that stock? No. Many stocks went down after my entry price, and what I have done, I kept my stop loss as a maximum 10%. That means any stocks from my entry it went 10% or below, I cut that position. I square off that position and I remove that stock from my portfolio. That is why you don't see any big losses, right? That is what known as cutting your losers quick. That is what I was telling in the beginning of video. That is what many people do it. They hold on to losers for years and years and they get trapped. But I don't want to be in that kind of situation. That is why I cut my losers quickly and let my profits run. So that is what you have to do if you want to build a long-term portfolio. That means you have to cut your losers quick. Don't hold on to your losers. Have some stop loss, 10%, 5%, whatever it is. But once it reaches stop loss, immediately cut off that position and only hold on to winner. That is what known as cutting losers quick and letting your winners run. And another thing, you can see that total holding showing 67. Total investment is also showing around 67 lakhs. That means I have done the strict position sizing of around 1 lakh per stock. That means I don't put all the money in one stock. Neither I don't put all the money in 4 5 stocks and I hold on to it, because I want to diversify it, because most of the stocks here are maximum are small cap stocks and risk is very high in small cap stocks. That is why I don't want to put all the money in one or two stocks. Rather, I want to diversify it. That's why my position sizing is I allocated around 1 lakh per stock, so that if any bad news comes, my maximum risk is only 1 lakh rupees in that stock. Okay. So that is how I am doing risk management and position sizing. And you can see that currently profit is showing around 6 lakhs. If I want, I can book this profit and feel happy that I made 6 lakh profit, but I'm not booking this profit because it's a long term portfolio. That is a kind of discipline required to hold on to your winners and not booking profit too early. Okay, so that is what I wanted to discuss in this video about the process what I follow in building my portfolio, that is strict risk management and position sizing and cutting your losers quick and holding on to your winners. And disclaimer, this is not a recommendation video. That is why I have not shown you any stocks which are there in my portfolio. This video is only to show you process what I follow. Okay, the next one is using the right prompt. I started using ChatGPT, Google Gemini, and Perplexity, and I found Claude AI is the best AI tool for especially in stock research. Okay, I was saying that it all depends on what prompt you give it to the AI. If you give the very detailed prompt, then AI also will give you detailed analysis. So this is the prompt which I use it for my research, and total this is 13 pages prompt which I have given below this video in the description section, and you can copy the entire 13 pages prompt and then you can come here, paste it here and type enter. And you can see that once you have entered, it asks you to what is the stock you want to screen and how many years you are planning to hold it. You can put any stocks, whether it's large cap, mid cap, small cap, micro cap, anything. But for this video purpose, I'll put HDFC Bank and I'll put as a 5 years. So that means it is asking what is the stocks you want to screen. I have mentioned as HDFC Bank, and how many years are you planning to hold it. I have mentioned as 5 years, and click enter. And it will take around 5-6 minutes because it is doing the live web search with all the data whatever is available online, and in around 5 to 6 minutes it will give the entire report. Okay, now you can see that after waiting for around 5-6 minutes, finally a report is ready. First it is showing what about the fundamentals. It's showing that strong fundamentals. Then it shows about the green flags, that mean what is working in the stock favor, and red flags, that mean what you have to be careful about the stock and what to track before committing your capital, and what are the opportunities ahead and risk to watch. And after that, if you come to check the ownership, it will show the promoters, FIIs, DIIs, promoter pledging, everything you can see it here. Then peers and news. Peers and news mean it will tell about competitors, like how it is doing compared to others. Like other banks, like HDFC Bank, it is compared with ICICI Bank, Kotak Mahindra Bank, Axis Bank. What is the revenue growth of HDFC Bank compared to other banks? Then it will show the returns like ROE, ROCE, dividend yield, everything. Then it will show the balance sheet, and then it will show about the growth like revenue growth, net profit growth. It will show about the valuation like price to earning, price to book value, and the snapshot. So this is, you can see that total detailed analysis. You can do it for any companies, and in the decision it will give the verdict. But remember, it will not tell you whether you should buy or sell. It is not a buy sell recommendation. It will give you the verdict decision. That means what are the green flags, what are the red flags, what are the opportunities hide, risk to watch, everything, and then you can take the decision. Okay. And prompt you have to only paste only once. After that you don't have to attach the prompt every time. Next you can type any companies. Okay, and again it will give the similar report. So that is what I was saying, that if you want the detailed report, then you have to give the detailed prompt, so that you'll get this kind of total research report, so that next time if somebody recommends you buy this stock, buy that stock, then come here, put this prompt and type the company name and put how many years you are looking to hold, and then it will give you this kind of report, and then you can decide it. And as I said, if you are interested to have this prompt, you can go below this video in the description section and you can copy that prompt and you can paste it in your Claude AI for your stock research. So now the next one is about risk management and position sizing, because especially when you are building small cap portfolio, risk management, position sizing very important, because unlike large caps, small caps are very volatile. So that is why stop loss is mandatory, managing risk is mandatory, position sizing is mandatory. So now I am going to show you one presentation on what risk management and position sizing I follow. Okay, now in this presentation, I'll tell you how I'm building 100 stock portfolio with AI and what is the risk management position sizing rules I follow. First is my total portfolio capital is 1 CR. So that means I have kept 1 crore as a total capital for this small cap portfolio. Next is portfolio type. I said I am mainly focusing on small cap portfolios. So out of 100 stocks which I am planning to build, out of that maximum I want to focus on small cap. Why small cap? Because small cap have a higher chances of growing faster compared to large cap, because large cap mean it's already became large, right? So small cap have a high chance of becoming large caps. So that is why I want to focus on small cap. So that is why most of the stocks I want to focus on small cap. Next is number of stocks. Number of stocks I want to limit it to 100. Around 100 stocks I want to focus on this portfolio. Next is capital allocation per stock. So that means how much capital I am allocating. I am planning to allocate 1 lakh per stocks. Why 1 lakh per stock? Because small cap have a higher risk compared to large cap stocks. So that is why I want to limit it to 1 lakh per stock. That means anything bad news comes in that stock and suddenly that stock crashes, I know that maximum I can lose only 1 lakh rupees. So that is 1% of my capital, right? Even if that company goes bankrupt and that share price becomes zero, I know that maximum I can lose only 1 lakh, and that will be 1% of my capital because my capital is 1 CR, right? Next is stop loss per stock. I said whether you are trading or building portfolio, stop loss is mandatory, and stop loss becomes more important, especially when you are building portfolio with small caps. Because as I said, anything can happen in small cap. Small cap is like a high risk, high reward. That means reward can be very big, but risk also very big. So that is why stop loss is mandatory, and I keep 10% of my entry as a stop loss. So that means I deploy 1 lakh per stock. Suppose a stock trading at 1000 rupees. Okay, I enter at 1000, then my stop loss becomes 900, which is 10%, right? So that is how I follow it, and I strictly follow it. If after my entry it becomes 900, then I am out. I close that stock. It may happen that again if stocks start going up and it gives some breakout or it goes in a trend, then I may again buy that stock. But if it goes below 10% of my entry, then I close that stock. That is what the risk management I follow. That means keeping stop loss so that I never get into trap where I have to hold on to the losing stock for years and years. So that is why I keep my stop loss and I cut my losers quick. Next is entry strategy. Entry strategy, I use techno funda approach. What is the techno funda approach? That means when you are using technical and fundamentals both for buying a stock, that is known as techno funda. In trading, you know that we only focus on technical, right? We only look at the price action, support, resistance. We don't focus on fundamentals and all this because we are not holding for long term. We are just trading it for a short term. But when you are building portfolio long term, fundamentals are also very important. Technical, I use my technical knowledge of last 20 years. Fundamentals, I use AI. Holding period as long as fundamentals are strong. Okay, so that means once I bought the stock, I let the winners run. But if I see that fundamentals are getting weak or stock is making a big reversal or something, then I may sell it off. Next is profit target. So here you can see that in trading we say 1 raise to 2 risk reward. We talk about 1 raise to 3 risk reward, but here nothing like that. I am not keeping any fixed target as such, and that is what you need discipline to hold on to your winners. Okay, that's about risk management and position sizing. Next is golden rule, because rules are important and you have to stick to your rules. First is rule is protecting the capital is the first. Okay, that means whatever the capital you have, ensure that you have to protect the capital. Whether you are trading with 1 lakh, 5 lakh, 10 lakh, 50 lakh, whatever it is, protecting capital first. And how I'm protecting that capital? By keeping stop loss, right? I'm protecting my capital. Next is I'm allocating only 1 lakh per stock into 100 stocks. So that is how, if any bad news comes, I know that maximum risk is only 1 lakh in that stock. So that is how I am ensuring that my capital should be protected at any cost. Next is cut losers quickly. That I already discussed, that I keep strict stop loss of 10% and I square it off if it goes below my entry price by 10% or more. Let winners run. That means don't cut the profit too early. That is how people make big wins in stocks, like 10 times, 20 times, multi-baggers and all this. How they do it? Because they let that winners run. Okay, so that is what important. You should let the winners run. Never average down. That is what people do it. They buy stock at say 500 rupees. It goes to 450. They buy again. 400. They buy again. 300 it goes. They buy again. So averaging down is very, very risky when it is small cap. And finally, follow rules, not emotion. That means whatever the rules we discussed here, you have to follow that. It is not that you write down the rules and you remember the rules, but when the trade is going near your stop loss, you remove the stop loss and you go through Google and you do some research, and it says that, oh, this stock is good, it can go up and all, some expert is saying, and you think that, oh, this expert is saying this stock is good, so it can go up, so I'll not take my stop loss, I'll hold on to it. No, you have to follow the rules. Once you have decided that where is your stop loss, you have to follow that, because you can enter it again. That means you have entered here that stock, and instead of going up, it started coming down, and your stop loss is here. Take your stop loss. Okay, after that anything can happen. After that it can go down, and after a few days, few weeks or few months, it can make a breakout. You can enter again. You can enter again here. It doesn't mean that you will never enter that stock, but keep the stop loss, so that sometimes what can happen, it can, instead of going up, going down, down, it can come to the single digit and you are holding to losing position for years and years. That should not happen, right? That is why follow rules, not your emotions. Next is disclaimer. Okay, this video is for educational purpose only. Whatever I shown you, only for educational purpose. I am only sharing my personal portfolio building process. I am sharing my personal portfolio building process. Okay, I'm not saying that you should also follow that. I'm just sharing it what I am following. This is not a stock recommendation video. I said earlier also, this is not a stock recommendation. AI used only as a research assistant to speed up the analysis process, because earlier days, if you want to do analysis of any stocks, right, even though you know the fundamentals, how to read the balance sheet, everything, then it would have taken hours and days to analyze one stock. But now AI can speed up the analysis. But you should also know that AI generated reports may contain errors, incomplete information. So that is why always verify with other reliable sources. Don't depend 100% on AI. Okay. And finally, always consult a qualified financial advisor before making any investment decision. And the last one is technical parameters. That means even though you select a fundamentally very good stocks, but if you enter a wrong place, that means you enter near the resistance, then what happens? It goes, faces resistance and reverses, and your stop loss can hit. Even though you selected good fundamental stock, since your entry is wrong, your stop loss can still hit. That is why entry is very important. That is what I also follow. That is why, based on my technical experience of almost 20 years, I decide based on support resistance, based on supply demand, based on price action, based on trend, based on breakout, based on volume. I use various parameters before I enter. So that means for fundamental I use AI. Then I see that stock chart on whether it is meeting the technical parameters. Then I select the stocks. But I wanted to cover technical parameters also in this video, but this video is getting very lengthy. So I'm planning to have it in part 2 of this video. That means in the part 2 of this video, I'll discuss about what technical parameters I use before entering the stocks. Okay, so that's about this part 1 of this video. And again, disclaimer, this is not a recommendation video. That's why you have seen that I have not shown you any stocks which I'm holding in the portfolio, because I just wanted to show you the process I follow to build my portfolio with discipline, like strict risk management and position sizing. So that is what I wanted to share it through this video. So that's it guys from my side. Let me know in the comment section, how did you find this video? I'll see you soon with a new video. Until then, bye and take care.